All right, everyone, welcome to our Monday evening, June 22nd, Hurley Investments Market View Commentary. But the high commentary is ready to go. We're going to start off a little bit different, and we're going to go through, all right, little bit different. Right now, our markets are acting weird. If I was to vote, ask this group, what do you guys think? Are we going to go up or are we going to go down? Which way is our market heading right now? I'm interested in your opinion. So take 30 seconds, type in an opinion. Are our markets going up or are they going down? And give me an idea. Give me an idea of what you're thinking about. We have a couple answers. No clue. Going higher because of stimulus. I would agree with that one, William. Stagnant, up and down in a one day. I mean, wow. The short answer is, the real answer is nobody knows. Why does nobody know? We just did something that has never been done before. $1.9 trillion stimulus. Now we've done stimulus, so who knows? I'll be honest with you, who knows? I'm just going to throw my thoughts out there in general so you'll know what Keith and I have been talking about and where we're going. Personally, I would rather protect earlier than later for earnings / tax sell-off because of the seasonal event, which is tax selling, right? Next week is Good Friday, and the markets are closed. That also means next Wednesday is the last day of the month. So I feel like we're going to have to do some kind of protection for an end of the month sell-off that will most likely happen next Monday or Tuesday. So I have till the end of this week to allow things to do a bit of a rebound, to protect higher, and to then go into some tax selling in a holiday week next week. And then the week after we get to earnings. Kevin, how do you define earnings? Well, for me, I pretty simply just head to somewhere that's going to give me the earnings date. And I go to Alcoa. Alcoa traditionally is the start of earnings. Earnings January 20th, so it's not put out yet. So that's going to be, so am I going to protect a couple weeks before earnings or not? I don't know. I'm doing the best I can to read the tea leaves right now. And I'm doing the best I can to be ready to overprotect versus underprotect. There's a problem. The problem is this huge amount of stimulus is 3 times what it was before for inside the US. And I'm going to go on a limb here and say it's twice as big based on international boost to economies. So I'll be honest with you, I'm uncertain. I'm uncertain, and we have some things that worry me. The first thing that worries me is E-Trade. As we went to E-Trade today, they had a problem they're looking into, and will fix very shortly. But actually, let me just go to mine. It'd be easiest to show on mine. Today, Baidu lost $69.42 on the leap. That's not even right either. Let me erase that. Let me try that one over. I'm going to have a do-over on that one. Baidu lost $71.50 on a leap long call position on a stock that went up $8.22 today. I mean, it really, this is one that makes 0 cents. This is one that on a stock that's up $8.66. Well, let's do the math. Let's figure it out. Now, remember, this is theoretical data, but if you run a check on the deltas, 71.50 cents, that's a good one to grab there too. We have a problem here, and it stands out as a problem. It's not even resetting. But if we go to the delta for these long calls, 49 cents, we should have made roughly $4 on our position. Instead, we're showing a loss of $71.20. I had my law firm call into E-Trade. You can't lose $71.50 per contract to have it go from $119 down to $47. It's not a drop in volatility. It's a mistake on the feeds of E-Trade. So there's already a call in here. In all honesty, that this should have a market change of being up $4 to be down $71. I mean, we're talking, this should be $116 worth of value. Well, all these other ones are reset. Doesn't make sense. There's an issue. We'll work on it. I mean, it almost looks like gall. It's like the puts are reversed. Problem with E-Trade and the feed of information to the account. Let's just put it that way. Doesn't make a whole lot of sense. Things need to be fixed on that one. We're working on it. China hacked us. I like it. China hacked us. And yes, they do acknowledge there's a problem there. So we're working on it. We're taking care of it. Problem number 2, right? Powell speaks all week long. Now, the good news is tomorrow he's with Janet Yellen. And you can't find a bigger dove. By all intents and purposes, we should have this taken care of. The understanding of interest rates, Powell's not going to raise rates for a couple years, so the market should run with it. I don't know if they will. If they will or not is yet to be told. But the market should run with it. And we'll see. We'll see. And the third problem is right now, number 3, no historical feedback, trends to follow during the end of a pandemic and start of huge stimulus. And we thought we had it before. I mean, in all honesty, the stimulus before definitely propped up our markets. If I was going to bet, I would say that we're going to have a higher stock market into the future. But I would not bet it this year. This year, I think our president and pardon the way I'm going to say this, I don't mean it too derogatory, but the Democrats have screwed things up. Democrats are going higher taxes. The Democrats are stifling growth. I mean, my hell, our damn gasoline just had a 50% inflation rise since we've had Biden in office. So, with that happening, we're in another time period of uncertainty. And when you're in uncertainty, the short answer is when you are in uncertainty, it seems like it would be time to protect. We've got some things protected. We have some things that are not. So I'm not 100% on everything, but I definitely am looking at how we're going to do or run some things in the near future to go off of some type of seasonal patterns. Meaning I'm going to take a look at what's happening typically through a tax sell-off, where it's definitely better to protect positions now and pay taxes now than it is later on. Apple, we're still letting run with some covered calls that expired. So actually, we're letting Apple run. Bank of America, we have a protection on Bank of America. Protection that's not necessarily needed. Baidu, we have protection that expires this Friday. Right now, we're leaning towards one more time, picking up shares and letting some things run. So we will probably, well, not probably, we've got 1 million. That's not right. We got 303,000 here. We've got another 173,000 here. So we have some profits to cash in to pick up some more shares. We're probably going to do it on Friday. We're probably going to wait till the last day and do it on Friday as Baidu gives up some of its gains. It's already down 93 cents after hours. It seems like Baidu has one up day, then one big down day afterwards. Anyone seen the Visa chart? Let's bring up Visa here. Look at that huge red candle. We've got a ridiculous red candle sitting there. All the way down. In fact, it looks even better on stock charts. Right on down. Bit of a bounce today. Reason why is pretty interesting. U.S. Justice Department probing Visa over debit practices. And this is amazing because basically they're saying, hey, Visa is pushing merchants to route debit card transitions over more expensive networks. That's what they're saying. They are running their card with whatever network is really the first one to be able to run it. It's kind of like putting your trade into the market. We had a huge down day on Friday. I mean, it basically opened up down at 210, finished off $3.10 lower through the day. Very interesting, though, is this has already run up the ladder to the Supreme Court. American Express refused to settle, took it to Belt of Justice all the way to the Supreme Court, which ruled in 2018 that it was legal for American Express to forbid merchants from trying to steer their customers to cheaper cards. It's like the government hasn't learned. This should be a buying opportunity for Visa. This should be an opportunity to get in. We are looking at it, and we're going to take advantage of a drop in Visa that looks this horrific to reposition and get into Visa cheaper. Dollar cost average some of our leap long calls, add some leap long calls into play, get some positions in play that can take advantage of this drop on Visa. It'll be interesting to see how we can become more profitable on a knee-jerk reaction on Visa. All right, what else do I have for you today? I have the market recap in here. Bond yields are still a problem. They will be until they won't. This will most likely finish up Wednesday when Powell speaks with Yellen, and finally they understand that that we're not going to be raising rates anytime soon. That we're going to let the economy run hot. How would you say? While we recover into next year. Let small businesses play catch up is the short answer, right? All right. Went over Visa with you. Went over Baidu with you. I'm still going to say our markets will end up for the week. Neat thing is I get to turn this up again and say, hey, we're bullish. Let's go bullish Dow that nobody pays attention to. We are now bullish on the S&P. Boy, we're doing 1 week bearish, 1 week bullish, right? And we're almost bullish on the NASDAQ. Let's make sure though. I think I could be wrong. Let's do the NASDAQ composite, and let's go to only a 3-month chart. Climbed above the 50-day, but it's too close to tell. Too close to tell. They're on top of each other. Still technically bearish, but it could be a nice rebound. I did not put in our earnings, so I will have to do that later. But for our economic reports, we had existing home sales. In fact, you know what? I'll just put this in later as well. This might be easier just to see. Briefing.com. Calendars, economic. Go to this week. We missed on existing home sales. Consensus was 6.5 million, came in 6.22. Current account balance tomorrow with new home sales. We'll probably miss on new home sales as well. I would probably assume this is a seasonal trend. Most people are not looking to move 2 months before their kids are out of school. Wednesday, durable goods. That'll move our markets. We will see really if we still have growth into our future. Thursday, GDP. GDP obviously always moves our futures. And then it looks like personal income, personal spending on Friday with the Michigan sentiment numbers. That's what we'll be paying attention. That's what we'll be paying attention to. That's what will be moving our markets for our earnings. Excuse me, our economic reports. There are no earnings that was really apparent to me. But for those that wonder how I do that, I just go up to earnings and I go to this week. Nothing really on Monday. We're in between earnings season. Tuesday, we have Adobe, which is rather important. We have GameStop. So those are two that I might pay attention to. Boy, GameStop, I can't believe they're where they're at. Watch them miss their earnings and watch these suckers fall something fierce. Wednesday, General Mills, Winnebago. Just something to pay attention to see where consumer discretionary is going. Winnebago did really well last earnings. We have Fuller Homes on Wednesday. We have KB Homes on Wednesday. Really interesting to see where they're going to call the home growth for summer. Thursday, Carnival Cruise Lines. I thought we already had them, so I'm going to have to check that one because that one does not sound right. And obviously nothing comes up for Friday, no earnings that we need to pay attention to. But this is where I look for my earnings. Carnival does not seem right, though. Carnival Cruise Lines, thought they already had their earnings, so I would not expect to see Carnival Cruise Lines. Yeah, that is wrong. Carnival Cruise Lines does not have their earnings on March 25th. All right, what else do I have for you today? Kind of going to be a quick one. Sorry, guys. Found that article on Visa. Please read through it. Pretty interesting to read through. I pay attention to CalPERS because my parents' pension is in the California $440 billion pension system that's 70% underfunded right now. So they're arguing if they can invest in tobacco and guns. I hope they don't. I hope they keep missing opportunities. Here's a $440 billion fund that has yet to understand you don't have to like the companies to be able to make money off them. I found a really interesting Apple report here. Some high-end iPads. I'm anxious to see where these end up. I found an article on Ford that I don't necessarily agree with, but I felt like it was one that you guys could reach and understand. I don't think Ford has risen too far too fast, but the explanation for what companies have been through that cause a stock to run too fast, too quickly, like Baidu, I think can be explained in this article. So pretty interesting. Make sure you read through this article. It's a great explanation of points that justify a stock that has run too fast or too high, too far, however you want to put it. Do read through it because you'll find it very interesting. And I think it's something that you guys can learn from on what defines a stock that's run too far, too fast. Disneyland reopened on April 30th, just some more information. Also, they're going to get a double whammy for their films opening up. And for that reason, I put an old article that I think we went through back in January. But one more time, some people asked me about, Kevin, explain your Netflix, your Disney, where you're coming up with your numbers. Just read through this article, and it shows the understanding of where Disney can go based on what Netflix has done. It would be, well, let's do it. It would be. When you look at Netflix right now and its current PE, it has a PE of 88.83. Forward PE says it's going to come down, but a current PE of 88. And I was looking for Disney at something around 33. When you compare the two, Disney's current PE is not there. Well, they're going to say 39. Where would I find? I don't know. Maybe it doesn't have enough information. But I thought I saw it down around 33. So I'm telling you guys, hey, if you change that forward PE or the current PE to something more reasonable. Remember, Netflix had over a 400p at a point in time. Most recently at like 222 or 212. Disney has a huge upside potential opportunity, which is why we're in Disney, which is why we're looking to continue to be in Disney, and why we can run a calculation for upwards to $300 by changing that valuation to the mid 40s or 50s. So any questions you guys have that I can answer for you tonight? Wasn't my intention, but we're kind of in a waiting pattern right now for a wait and hold. We do not still have FCX. Basically, we got out of them down at $25. Yes, they are trading at 36, but they're another one that's gone kind of too far too fast. I would expect FCX to come back down in price in the near future. But we are not in FCX right now. Kevin R., why have you not added protection on Apple? So again, Apple comes back down to them having the ability to buy their own puts. Yes, it's fallen from 150 down to 122. We had protection on it from 150 down to 135. We're doing a little bit of letting Apple run. Impact of Baidu going to Hong Kong exchange. Not much of an impact as of yet. The question is if they want to pull their stock off of the US exchange, then things might be getting a little more difficult. But there are tons of stocks that are duly registered. More often than not with the US, it's between us and Europe, where we'll be on the England exchange. Dual registration on two exchanges happens all the time. It's the threat of them pulling out of the US exchange and just only maintaining it on the Hong Kong exchange. That could be a problem for us. The good news is we just run everything like it normally is, and we're good to go. The option prices will stop trading. Future options prices, you'll still have exchanges through the US, and we're good. But a good question. In fact, Jim, I think I went over that one a couple weeks ago. So if you head back to 2 weeks ago, I believe I discussed Baidu and where things would go in that regard. Kevin, what new positions are you looking to get into? I'm not looking at any new positions right now. In fact, if anything, right now I'm more concerned about protecting current positions and getting into our next earnings season. I thought I was looking at some of these other positions to get into, these other stocks I'm looking at, but I am in no way ready to move forward with putting more money to work at this time. It's too unstable, it's too volatile, so I'm really sitting back. Other than Visa, I think Visa gives us an opportunity to put more money to work there. But I'm not looking at getting into any of those new positions just as of yet. Too much uncertainty, and if we're expecting a new tax bill, let's face it, that will just kill market growth, and we'll get a ridiculous pullback. So my expectation is we're probably going to have a bigger fall before we go higher. And man, as we keep passing through support levels, we'll keep adding protection on. We might get to double our share count, which means we're looking at it could be another 100% return next year for all accounts. It'll be interesting to see. If there are no other questions, I appreciate you guys being with me tonight. I hope this is helpful. I hope this tells you a little bit about where our heads are at and what we're looking at and why. Not a whole lot by way of where I would want to put new money. So we might just stay in cash for a while and look for a good opportunity here in a month. We might go ahead and add some protection and run through earnings. A lot's going to tell us, probably, in all honesty, right after our Easter break. All right, guys. Hey, take care of yourself. Appreciate your time. Thank you for being with me tonight. I still have all of last week's to get up on the website, so I'll be busy tomorrow doing that. Guys, take care. I appreciate your time, and I look forward to seeing you tomorrow evening.